Good evening, everybody. Tonight we have the pleasure of having 20-year trading veteran Mark Nicolas with us. He will discuss the reoccurring income with bulletproof asset allocation for 2015. So with that, Mark, welcome to the Candlestick Forum, and we're looking forward to your presentation.
Thank you, Becky. Good evening, everyone. Quick sound test. Good evening, everyone. Thank you for coming, and thank you for the Candlestick Forum and Steve for inviting me and having me tonight. My name is Mark Nicolas. I'm a 21-plus year trading veteran. I've started when I was about 21 years old. Trading is all I've done all my life. I started trading in hedge funds and prop firms. And tonight I'm going to try to share with you real money strategies that I do every day, okay, that I do either on the retail side or advising and doing consulting for institutions. So tonight I want you to think about the fact that, can you guys see my trading account quickly? This is a real trading account live, okay? The reason you know it's a trading account and not a paper account is if I go like this and go down, you see that there's not the word paper account. Let's say if I reduce the finger swing. So the reason I want to show you that is that I want to help you tonight understanding recurring income and the way it's going to flow and the way you can have high probability trades in your trading career. If you look carefully at this trading account, 2 days ago on the lows, I bought 5 contracts, and those are my runners, by the way. I bought contracts, and I have 5 runners left at 250, and the current price of those 199.50 calls are 663. So this is about a 250% return on my investment. Okay? And this is always combined, those directionals, which have a delta and a negative theta, are always combined with some positive thetas. See, tonight at resistance, I sold some calls at resistance, so it's like I'm easing into a debit spread. I'm closing at resistance some calls to sell some time decay. See, I sold some at 64 cents, 61 cents at the close, which went to 43 cents. And all that does is give me a cost reduction to my $2.54, which this one expires next week and this one expires tomorrow. So what I do is I take advantage of the 5-time decay, which I'm going to explain. So tonight what I'm going to do is show you how I specialize doing directionals on the SPY, the SPX. I'm going to share with you like some ninja tricks that I do on the portfolio allocations. Okay? And this is very, very powerful. Those are things that I've learned over the past few years. So this is the live account, but this is not it. I just want you to understand that I am trading live every day, and my goal is to find those trades where I can patiently wait for doubles and triples on the SPY, and also do credit spreads on tech stocks and others. Hold on one second. Okay. So anyway, the other chart, see, this is $14,000 that I made into a $35,000 account in December. This was one of my best days on the SPY this year in December, so not long ago, $14,000. And I'm going to show you how those directionals are and how they can help you add small amounts of money into those directionals for the year. On the 18th, again, you can see the trade here was a double. I bought 239 on a low in the market after the post-FOMC decision. And you can see that my entry was somewhere around here, and the trade after that went to $2.39. So the key tonight that you have to understand is to be able to do real money trade, okay, that you can do is by doing a combination of time decay and directionals. Every time you do time decay directionals, like this account today, which is not a screenshot, where I have 2,000. Now that's the buying power effect here, Stephen. Buying power effect, $2,700. P&L for the day open, 3,569. P&L for the day, 2,173. Okay? So what I'm going to show you is how to mix time decay and directional and understand that. So one of the things that have changed my trading career about 10 years ago is to get an edge in your trading. And one of the greatest hockey players, Grant Wetsky, said that what made him one of the greatest hockey players of all time is he didn't go where the puck was, but where it was going to be. Okay? And in trading, what it means, okay, so essentially your puck is going to be the price action. So if you have a support here of importance on your weekly and your monthly charts, right? And this is where the price is. So there's like it goes down like we've done 2 days ago, and it recross. So you have a shift of momentum, let's say a retest higher low, and now it goes to your resistance. What you need to understand in the options market is you need to understand where it's going. You need to understand where that puck or that price action is going to be. Because this is the only way that you are going to have an expansion of delta, okay? If you buy an options at a 50 delta, okay? That's the only way you are going to have the expansion of that delta going maybe to a 75 to a 100 delta. And this is where your options are going to double. And in order for you to do this, you need to understand not where the price is, but you need to understand where the price is in relationship to where it's going to go. And this is very, very profound. Okay? It's very profound when you trade and you want to do trades that have a potential of a double. But what you need to understand is proper allocation of capital first. Because proper capital allocation will keep you safe in this business. And what you have to understand is when you look at those trades here, and so I'm going to put it back, you look at those directionals, there's the safe trade and there's the dangerous trade. The safe trade is this one, which I took 2 days ago at the lows, which I'm going to show you on the trade tab. And I took the SPX credit spread 1970, 1965. Well, if you look at the SPX, today is 2062. That is a trade that is 100 points away from the current price. 100 points away from the current price, that's a safe trade. That's a trade that had a 68 to a 95% chance of success, okay? But you have to take them at the right place. Look, I took it for $1. I sold this credit spread for $1 and it's 15 cents now, okay? Now, on top of the time decay, you are going to mix some directionals, but the key that you have to understand is that 90% to 80% of your portfolio needs to be in safe stuff. And 10% of your portfolio needs to be in more aggressive directional play. Because any way you look at it, when I buy a directional call and puts, even though those have the potential to create wealth, like this triple, almost a triple, 250% return on my money, these are dangerous trades. Anyway I cut it, even though we have an edge of support and resistance to where it is, to where it's going, you need to mix that with time decay to reduce your cost basis. So at the close today, I had a cost basis of 254 on 5 contracts. I reduced the cost basis on 4 contracts, so I'm still net long 1 now. But at the close at resistance, I did a 1-2-3 punch that I'm going to teach you, which is one of my favorite strategies to do options, where I reduced the cost basis by 43 cents. Well, 43 cents doesn't look a lot, but I reduced the cost basis by almost 20%. And this is very, very profound because there's a lot of places where you can reduce your cost basis of your options to 0. And sometimes when you ease into a debit spread, you can even ease your cost basis to a negative, to a credit. And I'll show you later on. Okay? So look at this. This is very important. Again, you need to have a game plan when you come prepare in the morning to know the trend, the weekly support, the monthly support. You need to have stuff that prepares you for a buy zone, a caution zone, and a sell zone. What we do in the morning if I go to the charts on the toes there, I have a trade navigator. And every morning I wake up around 5:45, and I'll explain my routine a little more in detail next week. We have a webinar into our daily routine and recurring income for 2015 mastery plan and blueprint, where you create buy zones, sell zones, and caution zones. And the reason being is because when you trade, you need to know. So I'm going to open and max one of those charts. You need to know what are the numbers that you are going to look for longs. So I'm looking for longs usually at extreme sell zone. When it's like an elastic band, you stretch, and when you release, it goes back to its mid-price or its mid-range. And so at the sell zone, you're looking for buys, and at the extreme buy zones, you're looking for sells. So usually you're looking for sells here, you're looking for buy here, but you want to be cognizant at all times of what is the main trend. And the main trend is going to be in your chart. Whatever you look at, whatever tools you have, or you have your moving averages, you have your Fibonacci's, you have your volume profile to look for support and resistance, you need to understand that the main trend is going to be your weeklies, your monthlies, and for us, we have special proprietary dashes as well. And the intermediary trend, right? The intermediary trend is your 60-minute chart, your daily charts, and your 4-hour chart. And you have to understand that if your main trend is long, and your intermediary trends are 60-minute chart, daily chart short, that it's just an opportunity for you to go back into the main trend. So look, if you look at I'm going to show you this trade on the SPY. I'm going to pull it out. And I'm going to show you exactly when it was entered, the time, the date, and the price. So here, if you look at, I click on positions on those. Can everybody see that I entered that trade on the 6th, which was Tuesday at the lows, at about 1 o'clock and 29 minutes? Can everybody see that, please? I bought 5 contracts for $2.54, and they are $6.63. Can everybody see that? That was done at 129. If you go back into the main chart, this is my full pro tool, and let me show you. If you go on the full pro tool, and I'm looking at a 60-minute chart here, and look on the 6 at the dollar at 128.9, where the price was, you see that the price was right there. You guys see it? Right close to that inverse head and shoulder, right there. And everybody sees it. Right? So he touched the day trading zones right there at the 198.90 area, did an inverse head and shoulder, and I took the trade at the 129 at the bottom. So matter of fact, if you look at the options price and graph right there on the right, you can see that this option was taken Tuesday at $2.53. Is $2.53 looks like the absolute low in this option? Yes or no? For the past 48 hours. I'm not talking to you about the $14,000 I did 2 weeks ago. I'm talking something about that I took 48 hours ago that I still have as a runner. So those type of trades, okay, unless you're super French lucky, okay, they don't happen by chance. They happen when you have processes and you have steps and consistent steps that happens and help you. And so what happened here, what I saw here, again, is the main trend. So I go to the DTZ weekly and look what happened. What is the up arrows are the immediate trend. The blue dots are the continuation of a trend by 70%. And look what I did. I did nothing else than what I just told you. I traded within the main trend. The main trend was up, went back to the DTZ support here at 198 area, the 198, 199 cluster, See, if I zoom it, you look also for cluster high, cluster low on your charts, which will be very helpful as you trade. See, this was a low here, this was a high here, this was a low here, this was a high here. I call that cluster of high and lows, right? Within the weekly support. And when the weekly DTZ happened, boom, I saw the inverse head and shoulder, and I got it at 1 o'clock 29 and created a 250% return on the option. So the point in the matter that I'm trying to explain here is that you want to trade within the main trend instead of doing counter trend trade. Everybody who has tried to short this market for the past 2-3 years have been crucified. And when you short this market, it's like the puck, where it is to the major weekly, monthly support with cluster high, cluster low from the institutions, to where it's going here. Same when it recross, retest, and fell, where it is to where it's going here on the downside. And it's very important that you learn those things. But all of these super tools, super strategies in options, knowing the right options to buy. Do you buy them at the money? Do you buy them out of the money? Do you buy them for this week? Do you buy them for next week? Which one has the higher probability of success? So what I do is I have a 1, 2, 3 punch system that I want to share with you guys. What I'm going to share with you guys is years and years of blood, tears, and millions of dollars that I trade every year. And this is going to help you understand that particular trade. I've did a scheme on the yellow pad to help everybody understand tonight. And hopefully this will help you tremendously as you go in your trading career. So what happened is, number one, as you approach the major support, you want to start with a shift of momentum across, recross. And when there is that cross, recross, and I'll show you in the Trade Navigator, this is where I do the punch one. I open out of the money credit spread. As everybody sees that. That's the punch one. I'm coming down, I am coming down, but I don't know how much down it might come. And on the cross, recross, and the retest higher low, this is where I'm starting to open directionals with 15 days to 30 days open left in the options. So again, punch one, credit spread on the cross recross, the shift of momentum, out of the money so that you have a buffer to the next support. Then you have a cross recross, you have a retest, and I'm opening those 15 days, 30 days out options, right? If they are not too expensive, but the volatility 2 days ago was extremely expensive, so I had to go 10 days out. Then we know where the puck is going, you know where it is to where it's going, you go to the first resistance, and to keep your runner at the first resistance, which for me was tonight, I'm starting to sell the weekly calls that expires tomorrow. And then what I have is I have free runner coming to the next resistance. If I wanted a free trade, I could have sold the call expiring next week, and that would have provided me pretty much a free trade. So this is a 1, 2, 3 punch that can really change your life. This is the way I structure my trade. And what you want is you want time decay in your trade. Because time decay is a weekly and a daily paycheck that the time decay, the power of time decay in an option gives you. So for the people who don't understand how an option works, or even if you have traded options for 20 years, you have to understand the following. And I'm going to go basic back here so that you understand back what we have talked about, the 1, 2, 3 punch. And again, I will elaborate next week into the recurring income webinar 2015, first live event public of day trading zones that has been done for many months. If you have a $1 option right now, if you have a $1 option, you pay that dollar option. There's 3 components into the $1 options. You have real value above your strike price. You have time value, which is essentially the time decay. And you have the implied volatility into that option. And a lot of people that do options, they don't understand that this one box is going to move in relationship to those three components. The real value of the options above the strike price, the time value, and the implied volatility. So if everything remains equal, let's say we have real value in these options of 50 cents, right? Let's say we have time value of 30 cents. And let's say we have implied volatility of so 30, 50, 30, 20 cents, right? And so what happens is those three components are going to affect the option pricing. But the only thing that we as traders are sure when you buy an option is that 30 cents of time value, okay, is going to be worth what if it's a weekly option. So let's say on Monday, I buy this option for $1. It's Monday, Tuesday, Wednesday, Thursday, and Friday, right? So what happened by Friday? What is the only certainty that we know in this option? Is by Friday that time value of 30 cents is going to be worth what? Together. Okay, come on everyone. Everybody that has done options in their life. That weekly options is going to be worth what? Friday. That's the only thing that we know for sure. It's worth what? 0. So if that time value is worth 0, essentially, if you buy this option $1 on Monday, essentially you become the sucker on Friday that holds an asset that you pay $1 that is worth 70 cents. So question to everybody, who has made that 30 cents, knowing for certain that this option will be worth 70 cents, assuming the real value of the option stays equal and assuming the implied volatility stays equal? Who has made the money? You, the buyer of the options, or the seller of the options? The seller of the options. So what the 1, 2, 3 punch does, is to show you that the people who are going to make the most money and consistent money in this game is the sellers. It's always the seller of the options. They win on the bid and ask on big tech, on big stocks and on big tech options like Priceline, CMG, and blah, blah, blah. But there's a way to make doubles and triples in this market with the SPY, which is the highest volume and the highest open interest, where there's less game and less manipulations. But what the 1, 2, 3 punch does here is does what? I want to have positive decay. I want that decay Monday, Tuesday, Wednesday, Thursday, Friday to work in my favor and have positive decay in my portfolio. So here, the trick of this is to know the ratio on how you do your time decays and you mix them with your directionals. If you open a credit spread here, you have to make sure that you open a credit spread with 3 to 4 contracts for every contract that you take a directional. Does that make sense? For every 3 to 4 contract size that I do out of the money with a 68 to a 95% chance of success, I add 1 contract ratio on the directionals so that my overall time decay is positive. And as the trade goes better, sometimes I add some directionals, but when I hit the resistance again here, I sell the calls, so it becomes a debit spread from 2 to 3. It means I ease into a debit spread from 2 to 3 for cost reduction. So let me show you in the account, because it's not just me telling you concept. I put my money where my mouth is. If you look the structure of this SPY trade, everybody, I started with the SPX 1970, 1965, which I sold for $1, which now are 15 cents. Is this step 1? Do we all agree this is step 1? Yes or no? Step 1, right there. Yeah? Okay? Sold out of the money, put credit spread to add time decay, which is a time decay of $15 a day right now. Okay? This gives me a paycheck of $15 a day. Okay? Now, step 2, I did also the SPY. I added 2, which I sold for 29 cents, which are 10 cents. So I had about 7 contracts providing time decay. Then, step 3, I buy the directionals at the low, right? They do 250% return. Step 3, I sell. I sell for protection and cost reduction today the 2065 calls for 64 cents that expire tomorrow. Now, look at me. If you look at all the entries that are time spent. So let's look again. Let's look again that entire process because it's very profound. This can change your trading life with the asset allocation. So look at the SPX. I look at the SPX trade, and you look at the entry exit time stamped. Do you see that I did that on the 6th? Yes? I did this the day of the lows, right? On the 6th too. Back to SPY. Go back to SPY. Hold on. Let's look on the chart. Sometimes they lock. Let's go to SPY. And now look at this. You look at the time entry. You've seen already this one. That was done at the lows on the 6th. And now you can see also the, what is that? The ones that I sold today, they are timestamped at 2:32. No, sorry, that was on the 6-2, that's the credit spread again. So the other one that expires tomorrow is right there, sorry. And the one that expires tomorrow, I did it at the close today. Can everybody see that? So essentially, I reduced my cost basis of 64 cents, 61 cents, and 45 cents. I just reduced the cost basis of my trade by 20%. I just got a bonus discount on my trade of 20%. My trade is already dipping in the money anyway, so it's not going to be affected that much by time decay, but by neutralizing tomorrow, selling 64 cents, 61 cents, 45 cents before the unemployment report, and now it's 43 cents, 43 cents, I have time decay in my favor. And this is exactly what you've seen here. This is the exact step of the 1, 2, 3 point. These are stuff, guys, that unless you trade real money, people don't teach you. Number one, most of the gurus out there don't even trade real money. This is a solid plan. This is the plan that helped me making those trades. It's the same plan that helped me making $14,000 on December the 18th. Those are the same plan. Okay? So, directionals and time decay have an important point that you need to understand before you go to bed at night. Sometimes I take big position, 100 contract, 200 contract on the SPY. But the important thing is by the end of the day, I want to be somewhat delta neutral between 0 and 500 in my portfolio management. And on your theta, which is the time decay, I want to make sure I finish the day with positive theta. Do you see that the overall portfolio here is an overall positive theta? It's providing me $40 every day without me doing anything. And so when you understand those concepts of portfolio management, how to defend your credit spread, how do you reduce your cost basis, now you are approaching another dimension in your trading career. And this is what I am going to expand on a live webinar next week, Tuesday at 8 p.m. And usually we have 1,000 seats and those webinars fill very, very fast. You know, it's always full. I urge you that if you're interested coming next week, come around 7:15, 8 o'clock, or 7:30 for the 8 o'clock webinar. Because I will expand on those concepts, but I want to give you some of the base, the 1, 2, 3 punch, some asset allocations concept quickly, and then I'll take some Q&A and try to help you. So this is key. Portfolio, write that down. At the end of the day, you want positive theta in your account. You want somewhat of a delta neutral portfolio. And in addition to that, you want to understand how to reduce cost basis in everything that you do in this business. Because you are consistently fighting against the time decay in your options. Okay? But in order to do those trades, when you look at the trade navigator, you want to understand where the price was right here at the inverted and shoulder to where it's going in the extreme buy zone. Cross, recross, retest higher low is one of my favorite patterns because you have the confirmation. That's where I'm starting to do the directionals. And then we go to the buy zone. When we are in the buy zone, you start selling some of your calls. Either you sell the weekly 1 day out, 2 day out for quick time decay, or you can sell them next week. If you look at the option chain, so that I show you the concept of cost reduction on that particular trade, I paid $2.54. I reduced the cost with an option at the close today that expires tomorrow at 61 cents and 64 cents on the 2065 call. Right now we close at 204.60. So long I stay below about the 207 area tomorrow, I'm going to collect the entire premium. Is that clear, everybody? This is cost reduction. So long I'm going to stay around the 2065 plus what I received, the 61 cents, right? I'm going to make the entire premium. So I would have reduced that 254 cost basis by 61 cents, which is another 30% or 20%. Now, if I had done the same cost reduction today with 8 days left on the 2065, let me show you the 2065 calls, I would have had a cost reduction of $1.28. So look what happened now. I bought a $2.54 option at the money or one strikeout when we touch the lows at one or two strikeouts at 199.5. It's deep in the money for 254. If I sell it at 265 today for next week, I would have collected $1.28, which I reduced my cost basis by $1.28. This is huge. This is huge because 274 divided by $1.28, I just reduced the cost basis. Huge, you know. So 254 minus $1.28, it's $1.26, right? I just reduced the cost basis of this option by over 50%. And this is very profound. This is cost reduction where you reduce your options by 30, 20, 50%, and sometimes you can even break even or even get a credit if done correctly. There's a right way and there's a wrong way to do this. Okay? So now I want to go over asset allocations, which to me is essential if you want to trade. I know a lot of traders do not care about this, but unfortunately to me, this is a key point for your success. And I want to make a point. So this we'll do next week. I'll go a little bit more over who I am and what I've done in my trading career. But now I want to go over asset allocations. So the problem with most traders, I have been a trader for 21 plus years and I've traded traders on the retail side and institutions since 2002. I started with a website, a very small website called tradingimini.com, and then day trading zones. And what you have to understand is the biggest mistake that most of the trader does in terms of asset allocations is they put all their capital, they come in trading, and one of the worst things that can happen to a trader is they start winning. They put all their capital into one trading style or one account. And what happened, unfortunately, is when you lose 50% of that account, so you go from $50,000, $100,000, or even if you have a, let's say, $30,000 account tonight, which is the average of everybody in this room, right? If you have a $30,000 account, $25,000 account, and you lose 50% of your account, what will happen is what? Your account is going to drop to $15,000. The question to everybody, what is the rate of return that you need from this $15,000 left to go back at break even? What is the rate of return that you need now? Do you need a 50% to go back? What's the rate of return that is required for you to break even on your account? Which is the biggest mistake that all traders do. Most traders that do not realize that they gamble instead of being professional traders with consistent and replicable processes, that's what they do. You know? What is the rate of return? Zab is right, 100%. Jeff is right. John is right. AA is right. You need 100% return from that $15,000 just to go back at break even where you started. And that's a very, very difficult exercise. As a matter of fact, most traders, what happens when they are here, they trade scared. And if you risk, again, your entire $15,000 and you screw it up one more time, guess what? You're going to meet the statistics of 90% of the traders that trade directional, losing 90% of their money within the first 12 months of their trading career. And you'll be down to 7.5K. So what I've learned over the years, and which has saved me to go back to a 9-to-5 job, and has saved me, is the concept and the power of diversification of assets. And it's very important. I know a lot of people here know, but I know it. But the problem is there is a gap between knowing and doing. Does that make sense, everybody? You know you need to lose weight. But how many of you goes at the gym every day and lose weight? You know you need to eat healthy, but how many of you go and eat healthy? Right? So there's a discipline issue that you need to understand and convince yourself if you want to truly win at this game. Because tonight, I'm sharing with you ninja stuff that took me years and years and years and years and years and millions of dollars every year to manipulate and tweak and refine to be a consistent trader. But you're not going to be a consistent trader like this. There's principles, there's steps, there's things that you need to understand. So what you need to understand, and I'm going to tell you my diversification of account in the trading side, not in my entire life, but trading side. The reason you need to diversify, and it's very overlooked by everybody, not only traders, but by the general public, is you need to diversification to take advantage of opportunity. You might come with a health issue. You might have cancer. God forbid, you might have any big medical bills coming. You might have an emergency where you have to go, I don't know. You know, I had an emergency last year where I had to stay in Paris. I had to go back in Paris for almost 4 weeks, you know, because my grandma was sick with cancer and I had to stay with my grandma for weeks. Well, she was sick 4 weeks. I had to rent an apartment, you know, because I had sold my apartment. I had to pay my bills. Well, this is not cheap, right? That's called an emergency, to be able to pick up and go overseas for 4 weeks. You might have family needs that shows up. So what you need to realize is, I'm going to take the previous example, the same previous example. If you divide your total capital, let's say this $100,000, by 4 pieces of cakes of equal size of 25%, and let's say one of the trading piece is day trading or trading directional, which we all know is the dangerous part of trading. Trading directionals where you have 50% chance of success. If now you lose 50% of the 25%, so you have 25%, like the previous example, you lose 50% of your account. How much is left in your total portfolio? How much money do you still have out? As a matter of fact, I will go as much as, let's say you blow up your trading account here, directionally. How much money do you have left? How much do you have? So, number one, you lose half, like the previous. You're a day trader, you lose half of your account. You lose only 12.5% of your asset, which means you have about 87.5% of your asset left. Now, if you blow up the entire capital, how much do you have left? You still have 75% of your asset left. Do you understand the big difference between 87.5 and 50% on the previous case, which most day traders do? This will send you to the hospital and go back to a 9-to-5 job very quickly. Put all your money into directional trade. But if you segregate accounts in different styles and different things, it will help you. So, are you interested to know how I do it? Let's say you have a $30,000 account. Are you interested? Or $100,000? Would you like to know how I do it? And I do it with real money, like I show you. I don't just talk, I do. Okay? And everybody who knows me for the past 15 years in this industry knows that that's what we do at the day trading zones. And to help people, I really need to be strong, because I'm here to help you. I'm here for you guys to think differently about your trading. So the way I do it is this. I try to keep overnight, and this is for trading. So I'm not talking to you about a portfolio. I have 6 trading accounts in my career at all times. I have a Fidelity account where I buy stocks, I sell covered calls, I sell puts, I cost reduction asset. I have bonds, I have T-bonds, I have short bonds, I have long-term bonds, name it, I have tips, I have all kinds of stuff, okay? Now I'm going to share with you the trading aspect. So let's say you have a $30,000 account. I do not do Forex, Eric, although the principle and the day trading zones on the full Pro Tour works for all markets. I focus on 10 markets on the Trade Navigator that I showed you, and I'll show you a little bit before I'm leaving. So on the $30,000 account, what I do is I always want, write that note. It's a magic number that I found for me. I want to go overnight 30% cash. And the reason you want 30% cash overnight is to take advantage of futures opportunity overnight, gap against you on your options, or black swan. 30% of my account is always in cash overnight, so I am never maxed out in my account. One of the big pieces, let's say, is cash. That's it, cash, plain and simple. So if you are not disciplined, put 30% of your trading account into a bank that you can ACH or wire same day. If you are disciplined, always finish the day on your equity curve with 30% cash. Then I use about 50% of what's left here, so it's 2 pieces of the cake for OTM, out of the money strategy. I do credit spread, I sell put, I sell calls, I do anything for cost reduction that is possible. If you don't have a portfolio margin account which requires $100,000 to $125,000, you stick to the credit spread, okay? And even if you have less than $25,000, if we have time, I'll show you how you bypass the pattern day trading rule, okay? So with 50% of your account, you do out-of-the-money strategies that have 68 to 95% chance of success. Especially when you know where the puck is where the puck is going, like the support and resistance that have high probability with a high shift of momentum, that helps to create very high probability credit spread. And then on the last piece, you have 25% left, right? That 25%, right? I divide it by futures, right? And directional SPY for the day, or directional or long-term SPY that have 10 days to 30 days. Typically, the future account, I try to not use it. So the 12% left here, I try to not use it. But if I have to use it intranight, I can use the 12% here, or I can wire 30% of my account back into the account to take advantage of opportunity or whatever. Like 2 days ago was a nice day to have that 30% cushion if you were maxed out and caught up into. The reason you want that, ideally, you want different accounts. So if you blow up your future account, you blow up 12%. If you blow up your directional SPY account, you blow up 12%. Now, on the 50% left, you can do credit spread on anything, SPY, SPX. I specialize in SPX and SPY and couples of tech stocks. But this is very profound. And I hope I didn't bore you to death with this, because I'm telling you that the biggest mistakes I've seen traders do over the years is this one, the wrong portfolio allocation and the right amount at risk on their credit spread, the wrong amount at risk on their directionals. And they don't understand that to become successful, there are steps, there's processes, and there's a wrong way and a right way to do all of this. And it's not your fault. If you have been a trader for a year or two and you're still not consistent, it's not your fault. Heck, there's guys in this room that have been traders for 10 years and 20 years, they are still not making money. And they are still trying to learn and try to figure the right way to do it, right? So you don't know what you don't know. You know, it takes years, or you have to learn from others that are doing it with real money. And that's it. You know, that there's no 20 ways. Either you are going to lose money and learn, or you are going to learn from others that are doing it successfully, or that shows you how they do it with real money. That's it. There's no other ways to do this business. So let me show you another concept that is very important. If you had looked at my watch list 3 months ago, 6 months ago, a year ago, it would have been about 25 symbols. I don't know if you noticed, reducing everything to the bare minimum. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I do the crude, 11. IWM, 12. And I do SPY. I don't do ES. 13. I do ES or crude intranet if I need to hedge only. I do SPY. So 13, 14 instruments. And as a matter of fact, the best traders that I've been able to trade with in my career when I was in hedge fund prop firms, and I am still invested in an hedge fund myself right now with a bunch of friends of mine. The best traders that I know trade this. 1 or 2 market instruments. Do you understand? So instead of being the jack of all trade and always trying to go for the shiny object, we focus primarily into the SPY and the SPX for many reasons that I will explain next Tuesday. And it's very, very profound. These are where all the smart traders are. SPY, SPX. No earnings, no manipulations on the options. And look, and people think it's boring. Well, it's boring, but I don't know about you being bored here. But me, in 48 hours, I made 250% on my money. So this can be bored as much as you want, but that $2.54 options went to $6.63 at the absolute bottom, trading the SPY. Does that make sense, guys? The concept that I want everybody to really ingrain is the concept of, instead of being the master of none and doing all the scan and the crap all day long, be the master of few. You know, because if I pull like Mariel say, the SPY option chain here, where is it? Here. If you look at the option chain here, look at the open interest for next week. 189,000 contracts. 86,000 contracts. 17,000 contracts. During the day, the SPY has a 1 cent to a 3 cents bid and ask at the money, right? And look at the open interest, 46,000 shares. So this is the only thing that I'm willing to buy of the tech stocks like I did Netflix in December, but I really need to have a lot of out-of-the-money credit spread to buffer me from a loss, because these are less prompt to manipulations, and they are so much more efficient than the futures. The futures, any way you look at it on the ES, from the bottom to the top, you don't have a 250% return, where I got a 250% return with the options. Only options can give you doubles and triples like this. I got the option here on the left chart, and it's here at $2.54, even less than that. But nothing, not the ES can bring you a 250% return with the risk. And look at the cost basis here. I did 5 contracts for about $1,100, right? $1,100. And I have a $2,000 profit, right? I would have done the ES, right? The ES from 2,057 to 90 there, that's 67 points times 50, it's 3,350. But what you have to understand is the capital that you put at risk for this ES is $5,000 a contract or $10,000 a contract, margin requirements, most of the time to be safe. So actually, you did less than 50% or less than 60%, where the option here, in terms of real return on investment, is 250%. And this is very powerful, guys. And so now, you understand, if I pull an option chain on CMG, look at this. Look at the bid and ask spread and look at the open interest compared to the SPY. Doesn't even show up. Oh, here. So look, 8 days to go. Versus 189,000 contracts on the SPY. We have only 619 contracts open here on CMG. And only 58 contracts here. Who is getting screwed here? If you buy this thing at 1570 and have to sell right away because you're wrong at 1380 and lose 2 points, who's going to lose those 2 points? It's us, the buyers, right? You lose almost 15% of your money just getting into that option. So when I do take instruments on the trade navigator with the buy zone, the caution zone, and the sell zone to be properly prepared, like the SPY here, if you notice the 10 instruments that we do on the trade navigator, I focus, especially for the retail side of the day trading zones, I want everyone to focus on the bare minimum, which is what? Do directional on SPY, do become a professional with generous spread and premium on the SPX, and also you can do credit spread on Apple, Amazon, Netflix, Google, and we have the crude also, right? But that's it. That's all you need. All of this will grant you and help you make a career. And I promise you this will help you tremendously in your trading career as you progress. I know we went through a lot of concepts tonight, the 1-2-3 punch, cost reduction, and mixing time decay and finishing with portfolio management of positive decay. We went quickly over the portfolio management. We went over the importance of being prepared. Next week, Tuesday, I will go further in explaining the way I do my daily routine, the way that you see, these are my 4 monitors, right? Those are my 4 monitors, and I'll explain next week my trading routine that I do. But hopefully this was helpful to you guys because I do those every day. I didn't come with any even I just wanted to share cool stuff and ninja tricks. So next week, if you are coming, we are doing a live webinar at 8 p.m., which is Master Recurring Income for 2015. If you go to that link, which is the link for the Candlestick Forum, you will have access not only to the registration of the event, but you'll have access to a 3-part trading series that explain my concept. It goes more into detail to the stuff that we've done. It explains also why the SPY is more powerful than the ES in details on the 20-minute video. And all you have to do is go sign there, and you'll be registered for next week's webinar at 8 p.m. And you will access free 3 training series video, absolutely free. So if there's some Q&A, hopefully, hopefully all of this was helpful. You know, those stuff that I've shared with you guys are profound. And they are real stuff that are being done with real money on a daily basis. You know, you can, we have been around almost 12 years, 13 years in the industry. And hopefully those things have helped you tonight. You know, I shared a lot of stuff that people will not share for free. So if you guys have any questions, please let me know. Again, I urge everybody to register for this free webinar next week. It will be full. There's about 95,000 traders that will be invited to this event. So we know that the 1,000 seats will be taken. We know. I do those once in a while publicly like this. We know that it will be full. So I urge you to register and show up earlier at 7:15. After you register for this event, you will be redirected to the free videos that I talked about. It's a series of 3 videos. It's a training series. Actually, it would be awesome if you can watch them before Tuesday, so you take advantage of fully of what we'll do Tuesday. So Tuesday we'll be talking about the portfolio management a little bit more, how to crouch directionals and time decay, and how to master the support and resistance and the daily routines that we do on a daily basis. Okay? It will be at 8 p.m. NG Eastern Time. 8 p.m. Eastern Time. So everybody that registered, you will have the details to join the event. You will also have the details to get a replay of the event if we get the replay available. But you want to be live, guys. Because as you know, I don't know about you, but me, when I watch replays, I never finish the replay. So hopefully this was helpful. Thank you, Angie, Bill, Monty, Joseph. Appreciate the feedback. Hopefully everybody, this event was helpful. Again, I didn't come and I just tried to really show you the basis of some of the stuff that I do. Please stay tuned with our community. Come next week. Absorb those 3 videos. There's a lot of good stuff. You know, my promise to everybody tonight is those things will tremendously help you to improve your trading career. And at the very least, help you think about your trading career in a different way. So again, thank you everyone for inviting me. Happy New Year. Wish you the best in your trading career, and especially thanks for Stephen and Becky for inviting me tonight. Hopefully this was helpful to for everyone. Okay? Thank you everyone. Looking forward to seeing you next Tuesday.
Hi, Mark. Thank you so much for joining us tonight and sharing all this wonderful information with us. Everyone, have a great evening, and Steve, we'll see you in the chat room. Good night, everyone.